Hello and welcome to another edition of the Forex Technical Market Update. And today is Thursday, July 9th, 2015. I hope you all are having a wonderful day. Okay, in front of us we have a chart of the US dollar versus the Japanese yen. And the Japanese yen was up pretty significantly against the US dollar yesterday. But the market is recovering slightly. And we spoke about the fact that we could see a bounce in the Japanese yen out of the pivot point numbers that we spoke about yesterday. The monthly pivot point comes in at 120.95, and the market actually bottomed at 120.50. I also said that we could get some pullback into the 119.48 monthly S2 pivot point, but the market has slowed its decline at this one near this 120.95 pivot point, which also coincides with the 618 retracement level, just below 618 retracement level of the move from 118.50 up to 126 in the Japanese yen. Okay, so that's what's happening with the yen. Please note that we're still in a large uptrend for us. And swing traders, if you are looking to enter along this market, the market has given some indication that it could be stabilizing. But just bear in mind, we could see further declines in this USD Japanese yen pair. Okay, taking a look at the euro, and let's take a daily look at the euro. Yesterday we spoke about the fact that the market could come up and retest this consolidation. The market broke below the consolidation, came back up, and was rejected, and we see some selling in the euro. What will confirm this move down is a close below this candlestick pattern right here. If we do get a close below that candlestick pattern, that will be fairly bearish for the euro versus the US dollar. Taking a look at the Canadian dollar, the market is attempting to trade up to the old high near this 128 level, but we can't seem to reach it yet. I will look for further gains in the USD versus the Canadian dollar. Yes, the Canadian dollar is up slightly on the day, but the larger trend is up. The market broke out of this consolidation pattern. So if I was staying with a side of the market, it would be the upside. I will be looking to buy dips in this uptrend that I see with the USD versus the Canadian dollar. British pound versus the Japanese yen was down huge yesterday, and in a similar setup to the Japanese yen versus USD, we see some stabilization here in the market around the 186 level. Please note that this market could definitely decline some more. And what I find with British pound pairs is that we are currently at the 50% retracement level, but British pound pairs oftentimes trade down to the 618 retracement level or the 786 retracement level. It happens all the time. For example, let's take a look at this swing low to the swing high here. And it bottomed at the 618 retracement level. As you can see here, this is the 618 retracement level. The market actually bottomed at the 618 retracement level. And that's just something I have observed with the British pound. That doesn't mean that the market cannot bottom at the 50% retracement level, but it's just something interesting to keep in mind. Taking a look at the Australian dollar, we see that the market, after the decline yesterday, there is not much follow through as of yet from the breakdown. And bear in mind that this market could well come back up and test the breakdown point, which is around here. That's all in the realm of possibility, and you could get a rejection off of that. So oftentimes the market breaks, it breaks and then continues, or it will come up and then come back down, or it could come up and just completely reverse. I guess all of these are possibilities. But I'm just giving you what the technical analysis rules state. So with the Australian dollar, remember, it's still negative. The weight of the market is still to the sell side here. You will get better trades selling this market, and I would lean towards the sell side of this market. For our members, we are definitely short this market, and we are looking for further declines in the Australian dollar. Another trade that we are looking for declines for our members that we entered this week is Euro versus the Japanese yen. We see that the market had a move down, a retracement, and this could be the start of another move to the downside. The market has to definitely take out this swing low near this 133.68, 133.50 level. The market has to close below this level for this trade to get further momentum to the downside for the euro versus the Japanese yen. So that is definitely a swing trade that we are involved in, and we are looking to see if we can get some good pip movements in this market. Taking a look at gold, we see that the market is still in a consolidation, and if you keep an eye on this market, it looks somewhat like the Australian dollar, and we see that Australian dollar did eventually break down. So we're looking to see if gold will break down also. Seasonally, we are in a point where gold normally bottoms out. You normally see a bottom in gold in June, July, August region, and a rally, bottom into a rally. So if the market continues to head to the downside, that will definitely buck the seasonal trend in gold. And seasonal analysis is just another way you can, it's just another tool in your kit to analyze the markets, whether it's a forex or the stock markets. Okay, finally, let's take a look at the British pound, and it's still pulling back, and the market still has not reached this neckline that we have been speaking about over the last couple of weeks. You see it here. Oops. You see the neckline here. This market still has not reached this neckline, and we're going to wait and see how the market reacts around this neckline. If we do close below, I would say this swing low is very important right here, and that the actual price is 150.91. If we do close below this 150.91, we are still 300 pips or so above that level. If we do close below that level, that will be fairly bearish, and we could get a retest of this 146 low in the British pound versus USD. Okay, if you'd want, if you'd like to, let me just speak briefly about succeeding in the forex market and succeeding in anything. In order to be successful and to get good at trading, it's recommended that you look on markets every day or as often as you can. That does not mean you have to trade the market as often, but just look at the market, analyze the market, bring up a chart, see where the trend lines are, see if you recognize any chart patterns, determine whether the market is in a downtrend or an uptrend. What's the market doing? That's the first part of trading, your analysis. You have to be able to analyze the market critically before you become a profitable trader, and it's something that you get better with practice, just looking and seeing what the market is doing. Because the big guys, the big hedge funds, the big portfolio managers, a lot of them are seeing these things and are trading these things. And just often people think that to become successful at trading, it's something unattainable. It's definitely not unattainable. It's something that is well within your reach and your grasp. It's just about working on it and getting better. In the meantime, while you get better at trading, if you want to have your money start working for you and take advantage of the market movements that are happening now, you can click on the link below to sign up for the trading signals. There's a link below this video, sign up for the trading signals, and let's get you up and running so you can start benefiting from these movements in the markets here. Okay, this is Beyond signing out, and I will see you tomorrow. Thank you very much for listening.